Welcome back. Girish Pai of Nirmal Bank is now with us to discuss the fundamentals of the market. Girish, hi, good to see you in today. It's consolidating for the markets in the past couple of sessions. Do you think that that's how we're going to be up till year end, or maybe there are some sparks on the upside or downside you expect?
So I think, it's very difficult to call the very near term, even if it's for a few months. I think if you take a 6 to 1 year view, I think markets are going to head higher. I think one of the missing ingredients of this current rally has been earnings, and for the last many years, you've not seen index levels earnings actually grow, robustly. We've seen just about mid-single digit kind of growth. So I think 2Q earnings have been, therefore, a pleasant surprise, I would say. Except for certain pockets like PSU banks, maybe pharmaceuticals, and maybe oil and OMCs. I think the rest of the market has delivered earnings which have surprised on the upside. So I think the general view about earnings next year, FY19, of high teens kind of growth, I think is quite possible. So FY19 could be the first year after many when you'll actually see index level earnings grow at that kind of a rate. So I would think that the missing ingredient from an earnings standpoint is kind of coming through. Obviously, we have flows which have been fairly strong, and they'll continue to be strong as long as you have trailing performance from the equity side continuing to deliver very well vis-a-vis, say, real estate or gold. And obviously, global risk appetite seems to be fairly strong. I think most equity markets globally are trading at somewhere close to their 12-week highs. So I think the setup seems to be fairly positive from a 6-month perspective.
Girish, the view is obviously that Q2 has been much better when it comes to earnings, and you did just fleetingly mention about numbers and whether, and what's your sense about Q3? Do you think that maybe just the low base is going to help, or is there going to be some amount of fundamental see-through on the positive side on a sequential basis?
Sequentially, I'm not very sure, but on a year-on-year basis, my sense is most domestic focused sectors should probably deliver better performance. I think obviously the base effect is going to come into play because half of Q3 of last year was impacted by demonetization. So to that extent, the base is definitely going to come into play. I think one of the surprising factors in Q2 FY18 has been the margin performance, and some bit of it has actually come from input tax credit being kind of retained to some extent by the companies. I think one needs to watch that going into Q3 because of some of the actions that the government has taken in terms of setting up of this authority to look at profiteering. So I think that needs to be watched. But besides that, I think some of the other trends in terms of premiumization, the cost controls, I think that should continue to be there in going into Q3. Whether Q3 is going to be as strong as what some of the people in the market are assuming, I'm not very sure. But I think from a YOY growth standpoint, it should be stronger than Q2.
Girish, it's a pleasure. Thank you very much for coming on the show. Apologies, pretty sort of compressed chat. Promise that we do a longer one the next time you're on the show. Lots of news flow, especially with regards to the airline space and jet specifically. It's a wrap here on this edition. Okay, I think we will take a very quick break and we come back very quickly. Stay with us.